All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, September 28th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning. 9 a.m. Eastern Standard Time here on the YouTube channel. First time here, make sure to like these videos, subscribe to our channel, make sure to turn on notifications so you don't miss any of our videos. Glad to have you on board. Dow futures down about 19. Been watching this all morning as I do have S&P 500 futures short. Currently down about 10 pips on it. NASDAQ futures down about 35 this morning. S&P, like we talked about, 4309. Been updating the futures chat regarding the position on it. Russell 2000 futures, which was up yesterday, 1792, down 0.05%. Good morning. 10-year Treasury yields 4.661 this morning. That's elevated. VIX 1855. That's up 1.81. That reversed this morning. We had some economic data that came out. Posted it on the blog. We'll go over that here in a second. Crude oil pulling back from the highs of overnight of 95.03. We are now at 93.26 a barrel. Gasoline futures $2.52. That's down nearly 1% this morning. Gold futures are flat, 1890. Silver futures $22.75. Copper is up this morning, $3.68. Maybe you get a little bit of a risk on here. Euro dollar 24 pips, 105.28. 149.40 for the dollar yen, down 25 pips. Pound dollar 121.80, up 46. Bitcoin futures are up 0.86%, with Ethereum 1621 up 1.5%. Good morning, everyone. All right. Let's go ahead and get started with the economic data. We'll go to the live market blog. All right. So we were tracking everything this morning, giving out the data, giving out all the information. If you're not on the blog yet, the link is in the description below. Just go to our website, www.gar.capital, select free plan. You'll get access to our live market blog. It's free for everyone on Discord. Here's the numbers. Jobless claims jumped 2,000, 204,000 in September. 23rd week survey was 214,000. So we did get a jump, but still below estimates. Continuing claims up 12,000. GDP, second quarter actual 2.1%. The estimate was 2.2%, and the core PCE met expectations. So we got a little bump after the economic data was released, and then we started reversing. Bond yields are up this morning, like we talked about. Let's go and take a look at the S&P 500. I'm going to go by the 1 hour here. Yellow line indicates the 50 moving average, right? It's not 50-day because we're not on the daily chart. But you can see the last time we were above the 50 was on the 24th. And we've been below it since. We've wicked above it, but we're still below. Again, lower lows, lower highs. We were there before Powell, and we were a little bit before there in September 15th. So it's been a little bit, been kind of acting as resistance. A better, I guess, gauge of resistance would probably be your 100. That's at 43.45. That's pretty much the area I would say would be my stop for continuing downside. I think we're just going to get possibly just washed out. Maybe retest that 42.87, 42.80 levels. The only reason I say that we may just get one more drop is the fact that we defended this level at 42.78. And man, how important is that trend line here? This is from the wick October lows, from the wick lows in March. If we just expanded here, man, we got close, 42.77. So 42.75, that's that level you got to keep your eye on. If we take a look at the S&P spot, again, this is not the ES futures. The wick lows, that trend line holding right around 42.27 on S&P spot. So we're starting to get to some points where we were last October. That extreme fear sentiment, the world's over. Oh no, bond yields are going to be elevated, oil, all this. This is where positioning gets a little wacky. Put call ratios were elevated last night. I was reading it. 103.70. So let's take a look at that together. Put call ratios, again, this is just the ratio of people buying puts versus people buying calls in comparison. So the higher the number, more people are in puts. Lower the number, more people are in calls. So you see kind of these red marks. These are kind of really bullish times, and these are really, really scary times, I'd say. I assume this is May of 2022. And you can see where we are. We're as high, we haven't been this high up in call put ratios since early September and mid-August. So the question is, do we get this reversal down? Do we get that bounce? It's structurally looking like that. I think we can get one more slam below 4,300, maybe 4,280. And again, if we hold that trend line, I'm possibly looking at buying calls. This may be a little overdone. It's a little frothy. So the positioning is already tilting towards too bearish, too much fear. That's where we're looking for reversals. We're looking for reversals in crude. We're looking for reversals in yields. We're looking for reversals in equities. So we got to start fishing and start looking which of these charts look the best for a reversal to the upside. Tesla would be a pretty good candidate. Look at it's holding that 100-day moving average. Nvidia holding the 100-day moving average. AMD holding the 200-day moving average. Apple holding on to that 61.8 fib line. We got out of those puts yesterday. Microsoft, possible double bottom, maybe, if that's what you want to look at. Or we use the March 22 highs as our level of support. So, you know, we're starting to look like this may be done. Even QQQ, you could see it here. Looking like a possible reversal candle on the daily. Got a gap to fill at 364. It's a little overdone. The fear's a little bit much. We may get a little bit more, but even the JPM trading desk and Goldman Sachs and all these quant desks agree that yes, there is selling, but we're probably going to get a reversal soon as it's just a little overdone. The VIX never broke 20, but again, it is elevated relative to what we had in the past maybe 5 months. Let's answer some questions. Good morning. Do you know if Jerome Powell is speaking today or any events for today? Let's see here. Fed Chair Powell speaks at 4 p.m. We've been having Fed speakers all week, so it's kind of been back and forth, but Powell will speak after the bell. Lord knows what he's going to say. Hey, Carlos, when you say that you want price to break a certain level, what do you mean? Break and close above that price? Just break, then you open. Yeah, it's not a limit order. So again, all I do in terms of the breaking of levels is to open my eyes to them, get me the alert so I can start looking at what am I trying to do with this here. You know, right here, would I want to short any stock here? No, I think we're overdone. I like S&P futures because we can probably get some kind of weird crackdown, maybe a big 1% flush, and I can snatch that. But futures, I have a lot more control. There is no time decay or anything like that. But in terms of options trading, I think the best bet is to looking that you're going to bounce, that you're looking for reversal here. Again, a little overdone. I'm still not thinking that we may be too far gone because remember the seasonality in October does get a little bit of a flush down based on the pre-election year. We've been talking about that forever. So what I expect is that we probably get one more little bit of a push down, 40 to 80. I'll probably just get out of my shorts there in terms of the S&P futures. Maybe I'll move the stop to break even. Worst case scenario, 42.75. But if that breaks down, that's a huge trend line. Now we're talking about, you know, hey, how far can we go? How much can the rabbit hole go? Could we get a nice wick and a bounce? Absolutely. But we're starting to get to some pivot points where you're looking to play a reversal. It'll probably be not tons of a bounce, but something, you know, maybe 1 or 2% of a bounce in terms of relief. We're not at correction territory as of yet. So again, use the levels as a guide, but not right away to throw capital on it either. Again, you want to kind of see how the market is moving. The macro, is it lining up? If you're trying to do calls or puts, the volume, is that lining up? Is there any demand on the contracts that you want? Again, we're trying to buy stuff that we could sell pretty quickly, as soon as possible actually, and try to make as much as we can while we do it. So again, I'm not looking for puts in terms of stocks. I'm looking for calls, cheap ones. The question is, which ones look best? We'll be looking for next week. I expect a bounce, a relief bounce again, and then we'll possibly roll over into early October. That follows that seasonality. and then we get that bounce mid-October. The question is when. The real issue here, again, the risk of the downside is that we get that trend line break. But the risk of the upside is that everyone is on the side of very, very bearishness. Again, those puts are starting to get expensive. They get very, very expensive very quickly. It gets very crowded. Once that rug is pulled, you'll get that reversal. Just a heads up. Meta, Tesla thoughts. Let's take a look at it. All right, Metaverse. We had the what was it? The glasses and the Oculus event yesterday. So they had a product launch or a product unveiling. So volatile as it was, Meta, it still held up structurally above the 100-day, just like Nvidia did, just like Tesla did. So looking for Meta, is that an opportunity? I would say above 315, maybe above 310. You could talk about targeting the 320s. It isn't the best setup on the daily for a swing. When we look at the hourly, yeah, you need a little more. It's a nice bounce. I have the little lines here showing us a range of support, as we can see here. But really that 100-day, buyers defended that. What was the other one? Tesla? Yeah, Tesla, I was waiting for that 250 break. Never came. Got very close and then reversed down. And again, those buyers are defending that 100-day moving average. So if we can get a nice pop here, the last time we were below that was in mid-August, and you have a gap to fill there too. So again, another pivot point, one way or another, kind of the fork in the road. Is the left, is the right? Are we going to go up or down? That's really the question. But yeah, Tesla had a wick lower, but still defended that level. So again, that's on the watch list, man. If we start getting a nice little rally, again with some cheap calls, man, those can bang pretty quickly. Hey, Carlos, I've been gone for 3 weeks on vacation. Can you update me on the market in quick terms? Absolutely. Last 3 weeks, September seasonally, very weak. We had the same kind of price action as last year, 2022 in September. Yields went higher, dollar went higher, crude oil went higher. Everyone panics. People sold, not in a correction yet, but we were at a pivot point. There's 3 weeks for you. I hope that helps. But that's where we are this morning. So again, the focus is we're looking for a possible breakdown in terms of a quick one. Maybe we get down 0.5%, 0.75% or so. Retest the lows of yesterday. If we can defend that, I'm starting to see if we can get into some cheap calls in terms of stocks, not SPY or Qs. So just a heads up there. We did catch Apple yesterday on the put side. I think they are in the money right now. In terms of AMD, we got as high as I want to say 20% on AMD. We're looking for that 100 gap fill. That's a gap fill on the daily, I believe. Yeah, there it is. Got as high as 99.15. We are up this morning at 98.25. We were pushing a little higher this morning post economic data. We'll see what we get. Again, it is only Thursday. Apple, very well done. We are now in the money. But we caught that already. I closed it for a bag. Let's see if I can find this here. It was very nice to catch that. Man, that felt good. Nice one on Nick, holding that for a bag, 109% on Apple. Just feels good to be back on Apple, the 170 puts. Just wanted to say that I'm grateful for that. Looking at AMD, their support is around 95, resistance around 102, potential upside to 105 next week. Yeah, I have that 100 level for a gap fill here. If you're talking about 105, you've got to break above 103. But the real prize is at 109.51. Not a terrible place. The only issue I have, let's say, if just adding stock here, just playing the 200-day, is that we may get one more chance down in mid-October. So are we willing to do anything with this info right now? Let's let price dictate the future. Obviously, if we get this gap fill here, the longer we stay above the 200-day, this is where AMD starts getting interesting for actually adding to the portfolio. Looking at possibly 122. Could happen by the end of the year. Could be a nice snack. We'll see. I think SPY makes it to 420 and then bounces. That is the line in the sand. Actually, the line in the sand is 418.61. We just have a gap here at 423, which is actually filled. So there you go. That's your zone right there, 418.61. In terms of the trend line, let's see if we could draw that rather quickly before we sign off. I assume this broke already. Yep, we wicked below that trend line and we bounced. Look at that. So let's edit the property so it stands out a little more. All right, Conrad, you see it? Got that wick, got that wick. We wicked it there too, and we bounced. Wow. That could be it. That could be that reversal candle that gets us back to here, 438. Unless you break below these lows on SPY, I would not want to be short. It's just too expensive right now. It's too crowded. I wouldn't buy insurance on a home that's already breaking down. You know, so buying VIX here, it's already kind of a little too late. A little too late. Remember when we were like at 13 or 12? That's where you buy cheap insurance. And of course, we know the VIX will probably fall during the fourth quarter as we expect stocks to rise higher. Rinse and repeat. You buy it cheap, you sell it expensive. Name of the game. That's trading for you. But this right here, that's a reversal candle on the daily on SPY. I do expect us to bounce. Let's see what we get, maybe into next week. Have a great rest of your morning. I will see you guys on the Discord, and we'll see you tomorrow for the next morning note. Cheers.